Alrighty, what's going on, guys? So obviously this isn't a trade recap video. If you looked at my Instagram story, you'll notice that I didn't take a trade today because, just look at the 5-minute time frame right now. There's nothing. Absolutely nothing to take. So in this video, I'm going to be explaining how you can anticipate this shitty price action and not get chopped up in all this price movement and not blow accounts. So it's going to be a very short video, very simple concepts I'm going to spill on you, although I wouldn't really call them concepts, kind of just like things that I've seen across the time that I've been trading, and I've just seen them happen over and over and over again. I could just kind of tell when they're going to happen, just kind of that built-in intuition, as well as just understanding no news days, Mondays in specific, things like that. So obviously, let's just look at the 15-minute. I'm coming into the day, I'm pretty bullish, right? These two lows, 1:30 p.m. and 12:15 p.m., these lows from Friday. All right, this is our lunch low and this is our PM low. So we ran both of those lows from Friday during London session, and then a little bit of pre-market New York. So we ran those lows, and as you can see here, this opening price at 11:30, we actually ran that opening price. So we traded underneath that opening price, basically wicked it. If we look on ES at the same candle, we did not. So there's a rejection block there, a divergence between those two assets, right? So we get that trade down there with the rejection block, and also I believe there was like a lower time frame SMT, but there was hesitation to go lower. There was no displacement telling us that we wanted to go lower, right? So after seeing that, into the morning, the best way you can anticipate these horrible movements, just chop. You get in a trade, it starts to go in your direction, edges the liquidity level, and then goes right back down, stops you at a break even, and it goes right back up, right back down, right back up. It's just a whole cycle of nonsense, right? So how do you avoid this? Well, you need to be looking out for SMTs a lot, right? If we go to just this morning, right? If we look at ES and NQ, we look in the morning, what was it, 9:30, right here. 9:30 candle opens, we push up. Nothing happens. We're just chopping around. Finally, we get our first SMT, right here, with this high, and that sends us lower, right? Notice before this SMT happens, sorry, I wasn't realizing, this low here at 9:45, we ran this low here on NQ, and did not on ES. So there's a bullish SMT. So most people think, okay, we're long now, right? Wait. We SMT, we trade up, fill this gap into this order block, SMT again at the highs, right? The one I just told you about right here. We SMT'd again here, boom, boom. Sends us lower. What happens now? Look for lows that got taken, okay? We got this swing low right here, taken on NQ, not on ES. Bullish SMT. So we have bullish SMT, bearish SMT, bullish SMT. Look, we got another high here, taken, bearish SMT. Bullish, bearish, bullish, bearish. It's back and forth, back and forth, back and forth. And then finally we run up here, chop again. What do you know? Look at this, SMT, run lower. SMT, run higher. This happens almost every Monday. Some Mondays we get it's like a big move in the morning, and then it's just nothing. Just chop. After the objective hit, it's just chop. And that's another thing you need to watch out for too. If the objective has already been hit in London session or whatever, or pre-market, most likely the move for the day, for the rest of the day, is going to be choppy, right? What do we see on the 15-minute? So we can zoom out a little bit here. So we trade, these two levels here have been hit. That's an objective. Previous day equilibrium. This is a level where we can expect consolidation. What happens? We run those lows, rejection block, hesitation to go lower, come up, take this internal high inside of this fair value gap, nothing. So this is how you can anticipate days like this. Obviously you can't know if it's going to SMT, but if you see bearish SMT like this, and then a bullish SMT, and then one more, you could almost bet your ass that you're not going to catch a good trade at all. You might get like a tiny good trade, maybe like if you took this inversion, but that's not good. It's not a good setup at all. Right, maybe down to this low, yeah, but you're not catching that many points. And overall, it's not a good trade. Like 20 points, yeah, it's a lot of points, kinda. But just wait for a more high probable day. Why risk taking a loss when you know it's going to be bad? When you could just wait the next day and take a good trade with volatility, right? So that's really all I got for you guys today. Just want to make a simple video because I know a lot of people struggle with getting chopped up in consolidation and figuring out how to know, like, when should I trade, should I not, should I get out of this trade, whatever. First of all, you shouldn't even be trading in consolidation. That's just a given. You should not be trading in consolidation. And look at this, bullish S&T here again. All right, what is that going to do? Run us higher to probably S&T here again and then run lower. That's how Mondays usually go, but let's hop on just in case, you know. But that's all I got for you guys today. I'll see what I got for the rest of the week in terms of price action, see what we can make this week, and yeah, I will catch you guys tomorrow. Peace.